Welcome to The Explainer. Today, we're diving into a pretty bold prediction for Bitcoin from one macro strategist, and we're going to break down the three key market forces he believes are paving the way. Okay, let's get into it. So there it is, right out of the gate, $150,000. That's the call from investment strategist Mel Madison. And look, this isn't just some random number pulled out of thin air. He's got a whole thesis for why he sees Bitcoin hitting that target by the end of the year. So you gotta ask, right, what in the world is he seeing that makes him so confident? What market dynamics are lining up to make that even possible? Well, his whole argument really boils down to three things: a massive shift in capital, a really important signal from the US dollar, and a totally fresh way of thinking about market volatility. Let's break each one down. First up is this idea he calls the Great Gold Rotation. The theory here is pretty simple. All that money that sent gold on its historic run, well, it's now looking for its next home. And this is where it gets really interesting when you see them side by side. Gold, it's had this incredible historic run, and now it's kind of pausing, taking a breather. Bitcoin, on the other hand, spent the summer just consolidating. And in Madison's eyes, that makes it like a coiled spring, just waiting to pop. I love this analogy. He says to think of them as two surfers on the same macro wave. That's the debasement trade, money flowing into assets to protect against devaluing currencies. They're just catching the wave at different times. Gold already had its incredible ride, and now he's saying Bitcoin is paddling into position, ready to catch the very next one. And here's the key data point that backs this all up: 0. That's the 60-day correlation between Bitcoin and gold right now. When that number hits 0, it's a huge signal that they've diverged, that they're moving independently. And for Madison, that's what opens the door for all that capital to start rotating out of gold and into Bitcoin. All right, so that's piece number one. Now let's talk about the second pillar of this argument, and that's the role of the US dollar. It's been pretty volatile, and that has huge consequences for investors around the globe. So here's how this works. Earlier this year, the dollar was all over the place, which absolutely crushed foreign investors. Think about it. If the S&P 500 dropped 20%, they lost an extra 10% just because of the currency hit. So naturally, they got spooked and pulled back. But now, the dollar has stabilized. It's trading in a nice, steady range. And that stability is like a giant green light, signaling to all that foreign capital that, hey, the coast is clear, it's safe to come on back into US markets. And that brings us to Madison's final point. And this one's really interesting, because it kind of flips everything we're taught to believe as investors on its head. We're talking about volatility. You know, we're all taught that volatility is bad, right? It's risky, it's scary, you should avoid it. But Madison argues that in a really powerful bull market, volatility isn't a bug, it's a feature. It's actually a sign of a healthy, energetic market. Big swings are just part of the ride. And history totally backs this up. Just look at the NASDAQ during the dot-com boom. I mean, it soared over 400%. But along the way, it had 5 separate pullbacks of 15% or more, including one stomach-churning 28% drop. Even in its biggest year, 1999, it corrected sharply 3 different times before just ripping to new highs. And that's the real takeaway here. Those huge pullbacks, they weren't the end of the run. They were actually the fuel, the launch pad for the even bigger upswings that came right after. Volatility is what created the opportunity. Okay, so let's put it all together. You've got capital starting to rotate out of gold. You have foreign investors getting the green light to come back. And you have this new understanding that volatility is just part of the game. This all leads to one final massive question. When you just scan the major asset classes right now, what do you see? Well, stocks are already trading at pretty high valuations, so maybe not a ton of room left there. Bonds have already had a great rally, so future returns might be smaller. And gold, like we said, seems to be taking a breather. So if you're a big investor with tons of cash looking for a home, where does that next available dollar of investment, what the economists call the marginal dollar, where does it actually go? His answer is simple. It's direct, it's Bitcoin. He sees it as the one asset that is perfectly positioned to absorb this incoming wave of capital. It's that coiled spring just waiting to be released. And so that kind of leaves us with one final thought to chew on. What if we've been looking at volatility all wrong? What if, instead of being the scary thing we're supposed to avoid, it's actually a signal, a giant flashing arrow pointing exactly where all the energy, all the attention, and ultimately all the capital is headed next?